Okay, great. So I think we are live now, right, Forsine?
Yes, we are. Thank
Perfect. Thank
you.
you, everyone, for joining us. We'll give it a few minutes, 1 or 2 minutes um, to give time to anyone who wants to join, and after we'll be able to start. I see the numbers are increasing, so people are still joining. Okay, still maybe 1 minute, and after we can give it a go. Okay, perfect. Should we kick off? Yeah, perfect. So thank you everyone for joining us today. So this is a webinar organized jointly by Human Planet and Terrava. We will introduce ourselves in a while. I have with me Zoe, Zoe Bienvenue, who is Director of Origination at Emergence. Hi Zoe, how are you? All good?
Hi, Cédric. Hi, everyone. I'm good. Thanks for the
Perfect.
invitation.
Thank you so much for joining us. The objective today is actually to share a bit more about carbon projects and to do the junction between carbon markets and capital and fundraising. So we will share more information about it in the upcoming hour. So we are very happy to organize it. The way we will structure the webinar is that we will start with 20-minute presentation that we have about the carbon markets and carbon projects and how to structure on the financing side as well. After we'll have the panel discussion with Zoe, who will share some more insights on carbon projects, on a few topics that we will discuss. And after this, we will open the floor for questions. In the meantime, if you have any questions during the presentation or during the webinar, don't hesitate to write the questions in advance. And don't hesitate also to say hi in the chat and to tell us where you are joining us from. Usually we have people from a bit around the world, so happy to know from which part of the world you are joining us. And I think we can start actually. Um, so we have a live poll also to start with. We wanted to know a bit more into who is in the audience. So I don't know if we can have the live poll right now. Perfect, it's live. So we wanted to know what brings you here today. Either if you are actually an investor buying carbon credits, if you work in policy and regulation, or if you develop carbon projects, or also if you are more an advisor or consultant on carbon projects. And at the end, if you're just here to learn, also feel free to share. And I will ask Jonathan or Ursi if they can share a bit the results of the poll.
Usi, you can handle that, please. You have the
Yes,
host.
yes, thank you, Jonathan. Thank you, Cédric. So as you can see, we have a great mix of participants today. We are having around 8% of carbon credit buyers, 6%, 6% people are working in policy and regulation, 31 are carbon project developers, 44 who are just here to learn. So this is so great. Welcome everyone. Yes, and 12% are advisor. They advise on climate or carbon finance. So thank you. Yes, those are the results.
Okay, the percentage. Okay, okay, perfect. So interesting to see quite big proportion on carbon buyers, actually. Very surprised. So good to have them as well. So we will start with the presentation. So I will also introduce quickly Terra and Human Planet before we start. So we are an impact finance group where we advise but also support various type of project developers, NGOs, corporates, any type of stakeholders pushing forward climate actions through carbon project development. And what we do is that we actually support on the fundraising side, working on innovative finance to bring capital for positive impact. And also we actually are specialized into the registration, the marketing, the procurement of carbon projects. So we do all these type of things, and we have actually started to develop our own projects. So we have also a portfolio of projects to date. And what we wanted to do today, and thanks again, Zoe, for joining us to share as well, it was to share a bit more with the community about the status of carbon markets and really focus a bit more on capital and fundraising and explain what is actually happening in the market and what are the different options and the good practice in the market if you want to push your project. So we will start to take by taking a step back a bit on some of the key numbers. So these are some usual numbers for the ones who are actually active in the development finance space or in the impact investment space. The gap today on climate action is quite huge, continue to grow. What is actually a bit specific today is that on the other side, the funding which is available for, the traditional funding which is available for climate action is actually kind of reducing or more and more limited. We are talking about traditional aid, where there has been some cut recently in US, in Europe, and in some other countries. And also some of the governments are having some constraints on the budgetary side. So quickly said, on the financing side, in the traditional pathways, it's not the best days these days. And what we actually are pushing for and what we see the opportunity is actually to bring private capital and private investors into climate project and carbon projects. And in the climate action space, we're actually quite lucky because we can monetize carbon emission reduction, which is not something that everyone can do in the development space. So the idea here is actually to be able to monetize carbon emission reduction through carbon credits and being able, through this monetization, to be able to tap into financing and mobilize resources. So this is the opportunity that there is in the market. It's quite complex. We will deep dive a bit into it, but we wanted to share a bit some background about what's happening in the world today and where the projects actually stand for. And the good news also is that if you look at capital market and what is actually available within the financial markets, it's almost unlimited, compared to the size of the climate projects. So this is one thing. The second one we wanted to share is more on the regulation side, on the regulatory frameworks. Today, you have two types of carbon markets. One is called voluntary markets, which has been around for some time, up and downs, and there has been some issues on some of the projects in the past on reputational side, which impacted the markets, which crashed a few times and went up again. And today, it's actually more and more mature. There is, more and more initiatives pushing for integrity projects. So this is great in the voluntary side. But also there is a second type of market for carbon projects, which is called the compliance market, which is driven by Article 6. And this is where we actually see a high demand on this front. So when we say Article 6, just to share with everyone, this is referring to the Paris Agreement, which was signed actually in Paris and which regulates climate action between several countries. And the specific Article 6 refers to the trading of carbon units between countries. And you have I would say two types of Article 6. Article 6.2, which is the transfer between countries, directly between countries, and Article 6.4, which is for the United Nations and regulated by a supervisory body within the UN, which is yet to come. For us, we see Article 6.2 as a good opportunity because some of the countries are quite advanced. And if you have a project in one of these countries, it's actually okay to develop a project, get a letter of authorization, and once you have this letter of authorization, be eligible for this type of transfers between countries. And here the demand will be actually very, very important because we are talking specific countries, and some of them are actually quite advanced, like Switzerland in Northern Europe as well. And the demand is very important in terms of volumes. So the result is that the price actually resulting in an increase and a big premium compared to voluntary market. So yeah, if you have any question on this one, it's actually very important to know specifically for your country before developing a project, and happy to to provide any feedback. And this is public information, but it's a bit difficult to to understand and navigate all the legal agreements and what's happening in the space today. So happy to share more. So if we focus, so yes, this is for the context. If we focus a bit more on carbon credits, carbon projects, and capital now, and access to financing, there are a few things to know, and we have developed, a framework or a methodology that we follow, which is aligned with the standards in the market today, which we can show here as 4 to 5 steps. I think the first one is actually the concept and the initial concept and the identification of the operations or the activities of the project. So what is important to know is that depending of the type of project, the demand is not the same in the market. And I will give some examples. Today, there is a difference between carbon removal project and carbon avoidance project. The carbon removal is actually capturing carbon from the atmosphere, like a mangrove project, a reforestation of mangrove, for instance, or you actually capture carbon, while a carbon avoidance project is actually avoiding more carbon emissions, so reducing compared to the baseline, but it doesn't capture. And renewable energy, for instance, is an example because you replace kind of polluting energy source by cleaner energy source. So this is one way to separate first. And within the carbon removal space, we see a strong push or strong demand today on nature-based solutions, which is one. And also, so biochar is a bit an exception, but there is quite some demand. But broadly speaking, nature-based solutions. And within nature-based solutions, there is a type of project called ARR, afforestation and reforestation. There is also RED Plus project, which are conservation projects. And I think one to mention as well is mangrove or the blue economy, where there is a lot of momentum in the space. And one I forgot to mention, but is as also very important for us, it's the agroforestry type of project where you actually involve smallholder farmers and you actually can develop activities through regenerative agriculture or mixing reforestation and sustainable agriculture. So these are the type of projects. So this is a project concept, and if you start in the right type of activities, your life become much easier in the next steps because the demand will be higher for the carbon credit. So once you have done the phase one, which is a project concept, identifying the right methodology comes into phase two when you start the project registration. So we suggest having some some support here with some advisors because it's a bit complex. You need to choose the right methodology. You need to register into a standard, gold standard, Vera. There are international standards to know, and you need a system in place for monitoring and reporting. So this is a registration of the carbon project because the standard will actually issue the units, which are the carbon credits that you will be able to monetize in the future. And once you have started this process, you have a project which is considered as kind of sound and validated by the standard. And after you actually go in, once you have started getting, the validation from the registry, you can go into fundraising mode. And there are a few things to do. So one is what we call forward credit sale, where you actually find someone who will be able to buy your carbon credits in advance and invest today. So let's say you tell them, I will share 20% of my carbon credits for X years, give me X funding right now. And for them, it's an investment. You can use revenue as a collateral, which is an option. And you can actually close, the fundraising of the project this way. So these are the different types, and what you see, what is important here actually is the access to market and the access to buyers, because the quality of the buyer of your carbon credits is actually what will help you fundraise for the project, because this is what will actually validate your carbon revenue. For some projects, it's actually not too difficult. I'm thinking about the biochar space where the price is quite high and there is quite some demand, so it's okay to sell on the spot a big portion of the carbon credits. But some of the projects, and specifically if you work with communities and there is some revenue sharing with communities, to protect the communities as well, it's best to secure an offtake because the fluctuation of the revenue could impact also the communities. So yes, I want to keep time. I see I'm almost on to time on my 20 minutes. So I will just continue a bit on what are the key points that an investor or a carbon credit buyer will review when they do select a project. So the first one, as I mentioned before, is the methodology quality. So which standard you actually apply to, and how is drafted the documents, and what type of how strong your case and your documents and your analysis is, and if you get the right if you go for methodologies which are a bit more difficult, this is a way to demonstrate that your project is sound. Number two is on the MRV. So MRV stands for monitoring, reporting, and verification. What is happening today is that it's more and more digital. And if you can go for a bit of digital monitoring, specifically for nature-based projects, it's always good to have because you get some more granular information. And you mix it with reporting on the ground from the teams on the ground. It's also good to have it as one way to report. But actually, the investor and the buyers will really have and sometimes some requirements on the MRV because it's what can demonstrate that the project is actually happening on the ground. Number three, buyer commitments is also actually it's the most difficult and sometimes it's a bit chicken and the egg kind of a story because you need usually it's very it's easier to get investors if you have secured an offtake or buyers for your carbon credits. But the buyers of the carbon credits or the off-takers will actually ask for you to progress a minimum in the project. So it's a bit difficult, but getting access to buyers is very important. Number 4, community evidence. And I would go one step further, which is actually having a design built with communities. So involving the communities, not only when the project starts, but more upstream. And ensuring they are integrated to the project. After the track record of you, your organization and your partners, and the alignment on regulation. And here again, it was more, so it's number 6, more around Article 6. If you are in a country where there is Article 6, really go for it because it will change the perception of your project. Before we move to the next the discussion with our guest today, because we discussed about financing, and it's actually we know it's difficult to fundraise and also to get access to market. There is one structure that we call blended finance that we actually recommend for development of projects. And this is actually, it consists of several layers of capital into your project financing. So at the beginning, it's always good to go into the first layer, which is the concessional capital, which can be grants, which can be, some grants or some concessional funding from foundations to help you start the project and go at least on the feasibility studies and the consultation with communities and all this work so that you can progress. And to give you access to the layer 2 and layer 3. Layer 2 is development finance, where international organizations and more institutions are providing financing specifically for climate projects. And layer number 3 is actually commercial capital, and here even the commercial banks, they can provide financing for the buyers. So it's really going step by step, different layers of funders, from the more junior, which is a concessional capital, to the more senior on the commercial capital, but really trying to diversify. And if you go directly to a bank, saying, I want to do a carbon project, usually the answer is no, because they want to see that you have progressed, and you have to go to either someone in your network who can provide the initial funding, or you need to go for grants specifically in nature-based solutions. Yeah, so we'll stop here. On the presentation, we will also share the presentation, and we'll move to welcome again Zoe. Zoe, bienvenue from Emergent. So you are Director of Origination at Emergent. Thank you again, Zoe, for joining us today. Maybe what we can do, actually, I will give you the floor to introduce yourself and Emergent as well. And after we can do, I will have a few questions and we can discuss together.
Thank you, Cédric. Hi, everyone. Great setting the stage presentation, by the way. So I have been working at the intersection of climate finance, international development, and forest policy for the past 15 years. In particular, I dedicated my career to REDD+. What that means for those who don't know is an initiative to reduce emissions from deforestation and forest degradation and help governments and private projects access climate finance. I've particularly worked at jurisdictional scale, meaning for the implementation of REDD+ across entire countries or states, in comparison to REDD+ projects that are focused on more specific, smaller areas. And in this capacity, I've been supporting governments mostly in their efforts to access climate finance through multilateral finance and also carbon markets. So today I'll be sharing insights from this specific forestry sector and jurisdictional RED+ experience I have connecting governments with demand, capital, and other sources of funding. So I'm very pleased to be here today because this topic about bridging the climate finance gap is very relevant to jurisdictional RED+, where we need much more private capital to help forest governments access carbon markets and to protect nature. As Cédric mentioned, I currently lead the origination team in Asia at Emergent. Emergent is a non-profit organization. Its role and mission is to foster forest protection through carbon markets. And Emergent coordinates the LEAF Coalition. The LEAF Coalition was launched 5 years ago to create a large-scale and long-term demand signal to halt and reverse deforestation. Our sole objective is to maximize funding for forest countries to protect their forests. And we do so by mobilizing public and private sector finance with several instruments, the main one being forward purchase commitments that Cédric mentioned in the presentation, that we use to reward forest governments for reducing deforestation. So in practical terms, how it works is that we purchase credits from governments that have reduced emissions, and we sell these credits to our pool of buyers. Currently, the coalition features the participation of 4 donor governments: Norway, the UK, US, and South Korea, and over 25 corporations who together have committed over $1 billion to purchase jurisdictional RED+ credits. So just to give you also an idea of the current scale and progress, in total to date, we have contracted more than 20 million credits worth approximately more than $300 million. So very happy to be joining this discussion, and I'll hand it over to you, Cédric.
Perfect. And actually, we had a few slides also to show the the project and the geography as well. So do you want to say a few words in addition, Zoe, on some of the slides, or should we move to the
Yeah,
present?
I can say a few words. Thank you about this slide.
Yeah.
So it's to show where Emergent stands, to facilitate the transaction of credits between forest governments that have delivered ambitious plans to cut emissions from deforestation, that will verify these emission reductions, and the credits will be issued by Art3 standard, a standard focusing only on jurisdictional RED+ credits that is recognized by compliance schemes like CORSIA. So it enables countries to access compliance markets, not only voluntary carbon markets. And then we aggregate demand from private sector buyers. We also have sovereign participants, as I mentioned, 4 governments that are joining the deal also and the sovereign participation is mostly to leverage private sector participation. So this pool of buyers enter a deal with us, and we worked on forward contracts with a $10 floor price. And it's a back-to-back contract structure where the contract we sign with the buyers, the terms are reflected in the contract we sign with forest governments. And then on the next slide, you can see the scale of the LEAF Coalition. You can see all the countries with who we're already working in. In orange, you can see that these are the countries that we have already signed emission reduction purchase agreements. So in total, 5. Then there is 1 country that has already delivered credits and payments are made. This is Costa Rica. And then we have a growing supply pipeline across the 3 continents. And you can see at the bottom who are our corporate buyers and sovereign participants. In addition to that, we have partners and supporters that mostly provide technical assistance to these countries to develop their jurisdictional RED Plus programs.
And this is huge, actually. I mean, the scale is very impressive.
This is huge and exciting.
Yeah, and the partners as well is very very exciting. I imagine lots of pressure as well.
Yeah.
That big scale. Yeah.
A lot of pressure to prove concept, and we finally did with Costa Rica. That was the first country to issue credits in June and access the first leaf payments.
Okay, and maybe so before we start, if you could share a bit more on the concept of jurisdictional Red Plus, because some of our audience are not necessarily familiar. If you could define it a bit and explain, what is the why it's useful for governments as well. You're on mute, sorry.
Sorry. Yeah, so jurisdictional RED Plus is a type of RED Plus initiative that focuses on jurisdictional scale, meaning national or subnational level. So it's the advantage is that it allows impact at scale. It works at landscape scale, and as a result, the emission reductions and credits that are issued at GRED level are potentially huge. So there is the opportunity, to achieve big goals. This is of interest of buyers that tend to look for huge volumes. In particular, the buyers we're working with, you can see Amazon, one of the biggest buyer of the coalition. They are looking for huge volumes to offset their emissions. Their buyers are also looking to just, support nature-based solutions at country level where they have value chains operating. They want to have a positive impact. So working at jurisdictional scale allows them to achieve this results at scale that they are looking for.
Yeah. Perfect. And actually, it triggers my the first question I had because you actually shared a bit about it on the compliance and Article 6. So just to clarify, also your initiative actually in the jurisdictional Red Plus is and the type of project is actually within the compliance market, right? So if you could share a bit what are your views on the compliance market compared to the voluntary market and on Article 6 progress, it would be very useful.
Yeah, so we help governments market their credits in both the voluntary carbon market and the compliance market. So we can tap into these two markets, and that's, I think, the state of the carbon market today. It's hybrid. What we've seen with Article 6 now being live is first an interest in carbon market that is rising. With international rules established in the Article 6 that enable transparent and accountable trading of emission reductions between countries. That's one thing. What we see also is higher confidence in engaging in carbon markets from all actors, including the private sector and the public sector. To talk about public sector participation, for instance, more than 80% of countries are now intending to use international market mechanisms to meet their NDC, in particular through compliance markets. And then I would say the third thing we see is that it's not new. I think it's been for the past 5 years. In the voluntary market, demand is really shifting towards high quality credits, and you mentioned it at the beginning, but I think this is a key point to really underline. And demand is shifting somehow from nature-based solutions to solutions that remove carbon. So we see a lot of demand for carbon removals. So with and maybe one last point, it has to do with the compliance market specifically. So compliance markets are really growing rapidly globally. CORSIA emission trading schemes, in particular, represent a major emerging demand source for correspondingly adjusted credits. And what's interesting, I think, is that compliance markets now allow voluntary credits to be used to meet emission reductions required by law. And this represents a huge opportunity for suppliers of the VCM. And I think I have a slide here to show the proportion, of demand. And it's to illustrate, the growing demand pool on the compliance market. The majority of the demand pool is for CORSIA currently. In total, the total demand for ITMOs until 2030 is estimated at more than 600 million tons by 2030. And CORSIA, as you see, is the main demand pool. It's the pool in blue. And CORSIA, just to give you an idea, covers more than 80% of airline emissions. So annually, it means 50 million tons approximately, just to give you an idea of the scale. And compliance markets in green, so the ETS, the emission trading schemes, at national level, represent 30% of global emissions, so also a big demand pool. So for us, it's very interesting. We have a big avenue here for the governments to supply these markets, and obviously for project developers as well. And suppliers, intermediaries, governments that issue credits, they are now, increasingly looking to sell their credits to this very attractive demand pool. And just to finish, this demand pool, the compliance one, is very attractive because it's not subject to the same market swings we see in the VCM. And also compliance schemes tend to send like strong price signals. So very attractive for sellers. I'll stop here.
Yeah, no, very interesting. And I think what could be useful also for the for the audience is that so for instance, if you look at Japan, I would imagine this is a JCM. I mean, part of it would be the JCM framework, right? So some of these countries have actually, I mean, CORSIA is one big crunch, but also some of the countries have actually already some MOUs with other countries. So when you are in a country, and some of countries that are actually quite advanced in sea, like Ghana in Africa or some other countries, actually to check, I mean, to try to get in touch with the authorities in your country as a project developer is a must. And also to see if there is any MOU which has been drafted between your own country and another country, like Singapore, Japan, and see whether your activities are actually within the scope. And if they are not in the scope, and if you can pivot a bit, or you can try to be a bit innovative, I think it really makes sense to try to get into this compliance route. So it would be one advice, and all these things are public information. So it's not easy, but also with AI today, it's not so difficult to get at least a minimum understanding. So it would be a recommendation. So now if we want to get back a bit more on the topic around financing, which is also bankability of a project. So if you could share actually based on your experience on jurisdictional REDD+, but also broadly speaking, how you approach the question of financing for carbon projects. what can make a project bankable, and what is important for a project to be bankable, and what is a kind of pathway for for funding, which is always a key issue, specifically at early stage for project developers.
Yeah, so the first thing I'd say is that projects don't operate in a vacuum. So the legal framework to me is key for an investor or a buyer to look at. There needs to be, legal and regulatory clarity on a couple of things. I won't list them all, but I think that the main one is obviously, you know, does the current regulation allow for credit transactions? We've seen in some countries like Papua New Guinea or Indonesia, there have been moratoriums for several years, preventing the transaction of carbon credits. So project developers were just waiting for the moratorium to be waived. It's now the case in Papua New Guinea and Indonesia. So this is a key point, the regulation, and the regulation also should provide clear rules on carbon ownership and claims, because we've seen that can become a big bottleneck down the road and prevent the issuance of credits. So this really, to me, is like a huge first point to look at. And related to that, I'd say, confidence in long-term policy continuity is also important in terms of, the carbon trade rules. Making sure that, well, we don't know, but we can assess the risk, of a country remaining consistent with the rules they have established for carbon credit transactions, like registry rules, whether or not they will make correspondingly adjusted credits possible or not. So yeah, the continuity is key to address, mid and long-term risks for the process to derail. And then I think there are two other key points that we've seen, at least in jurisdictional REDD+ transactions, but I believe it applies to projects as well, is the timely delivery of credits. Because corporates, they have an annual planning to offset their emissions, and they need to have certainty on the timeline for issuance and delivery of the credits. And having visibility into these timelines can build confidence early on. And when timelines start shifting and slipping, this is where you can lose interest from buyers and investors. So and you can even lose them from your deal. So yeah, the timely delivery, I'd say, is a key point. And the last one, I didn't want to talk about it first, but really, I think today it's key, and it is the high integrity of the credits, right? I think high integrity credits are the only credits worth buying today. For several reasons. I think first, to mitigate reputational risks, of course, but also increasingly because I think companies are embracing the need to drive real permanent net reductions in the atmospheric concentrations of greenhouse gas emissions. And this, I think, because really there is now clear perception of increased physical climate risks that could cause really tangible damage, leading to big economic losses. So, and I can come back to that point, but really, I think now most buyers are really looking, and investors are really looking for high integrity credits, and for good reason, not just for the image, right? And just to give an example of the LEAF Coalition work, I mentioned we have more than 25 private sector buyers on board, and they all join for different reasons. I mentioned some want to offset, others just want to have a positive impact in the landscapes they have their value chains operating in, but they all want the same thing. They want high integrity, and And that's why they come with us on Red Plus, because we only purchase credits issued by Art Trees, which is a world-leading standard with that improves really on previous standards, in particular with very stringent rules on leakage, permanence, and safeguards, which are three key elements that buyers are really looking at in greater detail now. So, yeah, I think, yeah, this was to give you an idea of, what the buyers are looking for to before, investing in a project development, and also, when they're looking to purchase credits and they don't originate themselves.
No, thank you so much. So it's very interesting, and also with your position, actually, you have the very interesting, feedback and overview from the buyer side as well, with all the corporates that you have. So we know it's like when you say these things, it's actually really happening in the market. So very interesting. And I think I had many questions actually, but we will have to move to the Q&A. Maybe a last one on because we discussed a bit on blended finance and how to structure financing. So I don't know in the projects where you have been involved. I assume you have seen project developers, chasing grants on one side, going with some of them with some more traditional investors. In one of our projects, it's even they have investors from real estate in a nature-based project, for instance, the DFIs, the banks. So it's very, it's really, it's not very standardized, but on the blended finance component, where have you seen project developers actually leveraging grants to attract more investors, or using other mechanisms? Or it would be great to have, if you could deep dive a bit more on the different types of financing you have seen, and also the public financing, actually, that it might be also common in Red Plus.
Yeah, no, and that's a really important point, this topic of blended finance and how you mobilize both public and private sector finance. I can talk about, my experience working with government. So I think it's slightly different than, project scale,
Mhm.
because, governments typically tend to do a type of blended finance that involves donation, grants, potentially loans, but loans from traditionally it's been loans from the World Bank, so public money basically, non-capital market, or loans from multilateral organizations like GCF, and putting themselves some public investment on the table, so I think the case of governments, we still need to innovate and see how we bring private capital in. I think that's key, to see how we can leverage private investments to support efforts done at country level when there are initiatives that can lead to massive emission reductions and the generation of large-scale volumes of credits that can be then purchased by private buyers. And I think this is not a very investigated topic, or I've not seen many experiences, at least on carbon credits. And I think that would be great for any investor in the room to think about this now that we see government schemes that are, aiming for the issuance of high integrity credits. Like, how can the private sector help that effort? And I think returns can be big, and it's really a win-win situation for the public sector, the private sector, and the planet. Yeah.
Yeah. Thank you so much, Zoe. And it's actually a very good conclusion for this part. We learned quite a lot, and it's a lot of value you shared in a very concise and manner. After I invite you to join me also for the Q&A, I think we have like maybe a few minutes I saw a question already on Sudan, so I will take this one, and after I will invite Ursi also to share the question we received. I think we received some questions also before the webinar. The one I saw on the chat is more related to specific question on Sudan, actually. How can Sudan participate in this initiative with Sudan facing a conflict situation but having huge resources in the agriculture field? I think actually it's quite linked to what we discussed right now on blended finance and grants which are available. I think so we have actually on our side with Human Planet and Terava worked on Sudan on climate action as well, and it's definitely something which which can be explored. The advice here would be to go more into philanthropic players first and foundations who have actually pools of resources available for and specifically for Sudan. But actually, it's using carbon project in conflict setting. It's not impossible, and actually, it's quite something that can be justified. To give one example, there has been peace credits or credits for peace, which have been launched in the renewable energy sector 3-4 years ago. And it's something to explore. After I see another question actually already from Wedad, who is asking about the guideline. So what guideline should we use to work with governance and what to include in the proposals in clear topic and how we can train about it. So actually this one I will share actually let me just share the QR code again. I forgot to mention about trainings, or if you want any information, feel free actually to book a consultation here. And actually the point on governance is very important for carbon projects, because what you need to realize also is that you are managing investor funding and corporate or institutional funding. And there has been issues in the past, around the use of funds and the integrity of the projects. So actually having a strong framework, and I don't think so. So there is the CVCM today, which is around standards for integrity in carbon space, but I don't think there is like a toolkit around governance for carbon projects to date. But it's something that we would advise. So happy to book consultations from anyone or a discussion. I think we will share also. Yes, if you want also to reach out to Zoe, you can also contact us, and we will redirect if needed. So I think we're almost at time. Maybe one more question. Ursi, I suppose we have received some other questions also before.
Yes, Cédric. But right now we have quite a few questions in the chats as well. There is a question from Celestine. He said, how do you identify the right buyer for a project?
Okay. Zoe, do you want to, based on your
Yeah,
Yeah.
I can answer based on my experience, at least
Yeah.
at the Leaf Coalition. So the right buyer is the one that meets our requirements, because we want integrity on both ends of the transaction. We require integrity from countries, but also from buyers. And we only transact with buyers that have a net zero target and that have a science-based target initiative, a strategy in place. So typically we would not, have sectors, for instance, hard to abate sectors, buyers join our deals because they do not meet these requirements. So yeah, that's very important for us to also, ensure integrity on the demand side. And then maybe one last point is generally buyers that recognize the value of nature-based solutions, which is not always the case, and sadly seems to be every day less the case, especially in compliance markets. We see a lot of discussions around whether nature-based solutions should be incorporated and recognized. There has been a lot of discussion recently in the EU. By chance, they dropped their proposal to not recognize NBS for Corsia phase 1, but nature-based solutions are threatened, and we typically work with buyers that do see the value of nature-based solutions, and we hope there will be always more of them.
Great. Thank you, Zoe. And maybe one more question, Ursi, from the chat.
Yes, there is one more question. They said, for someone developing their first carbon project, what would you recommend focusing on from day one to make the project attractive to investors later on?
So maybe I can start on this one, and Zoe, if you want to add, I think because we see quite a lot on our side. The first one is actually, I think, the key point for us. So we have actually a framework on 3 kind of pillars. The first one is on communities. So to involve the communities and the different stakeholders in the project, because the key risk is actually to start a project which is not within the ecosystem itself. So you really need to involve stakeholders, including communities, government, authorities, municipalities, everyone in the project from the beginning, which is first one. The second one is really choosing the right methodology and the right standard. There are several types of standards depending on the type of project, and also based, I mean, some of the standards are not, or some of the methodologies are not, necessarily the most in the demand. And there has been some recent updates on some of the methodologies. So the choice of the methodology is key. And after the last one, demonstrating the integrity of the project as well. Yeah. And yeah, I mean, at the end of the day, it's also, fundraising and fundraising and fundraising, but this will be easier to reach some scale if you have these pillars in place. And yeah, I don't know, Zoe, if you want to add, or if you want, actually, because we are at time, but if you want to add, a few words on your side, Zoe, before we, either for these specific questions or about the topic today, before we close.
Yeah, no, it's not a new point. It's just to reinforce what you said on safeguards. At the Leaf Coalition, we see that any safeguards issue can be a complete turnoff for a buyer, and I believe it's the same with investors. So yeah, mitigate safeguards risks early on is super important.
Okay, great. Perfect. Thank you so much. It's great you might hear some kid around me, actually. This is what happens when you do a webinar during the summer. But it was great to have you, Zoe, and for all the the important points that you have shared. Once again, feel free to reach out, either to book a conversation. Also, if you want to reach out to Zoe, you can let us know, and we will inform Zoe as well. And happy to continue the discussion with everyone. And thank you, Ursi and Jonathan, for all the preparation for the webinar today.
Thank you, Cédric and team. Thanks, everyone, for the great questions. Bye.
You're welcome.
Thanks. Bye-bye.
All right. Bye, everyone.